Hello, in today's video we're going to go over the free risk management tool and how to use it to develop your own customized trading risk management plan for either passing a trading challenge such as FTMO, TopStep, or any of the other prop trading challenge firms, or for using in your own brokerage account to trade stocks, options, ETFs, Forex, crypto, futures, etc. Okay, so first off, to get a copy of the free risk management tool, just simply look at the top of the description under the video, and you'll see a link there that you simply go to, and then you'll be able to subscribe and get the free trading risk management tool. You'll receive it as an Excel spreadsheet, and there also, after you complete putting in your information at the link, you'll also receive an email which will also give you a link to the Google Sheets version of the trading risk management tool as well, so you can have it in both formats, Excel as well as Google Sheets. Okay, so before we get into that, please check out our Precision Daily Key Levels Indicators for day trading. These are all for the TradingView format. They're proprietary algorithm indicators that deliver precision engineered day trading levels and advanced price action analytics optimized for high performance day trading of stocks, ETFs, stock and ETF options, futures, Forex CFDs, Forex currency pairs, cryptocurrencies, S&P 500 SPX index options, and NASDAQ NDX index options. So you'll find the links to those here if you'd like to check those out. All of those are made for the TradingView platform. Also, if you need to go back to this video again, here's the link to that. Subscribe to our YouTube channel here. Here's some more YouTube videos that show you how to use our various indicators and how to trade with them and the type of results that you can get using them to enhance your account. Okay, so to start off with, as far as developing a plan, it just depends on whether you're using this to trade to pass a trading challenge to a prop firm, trading challenge company like FTMO, TopStep, or one of the many others that are out there. There's probably about 50 of them currently that offer trading challenges primarily on futures and or Forex. There are some firms that offer stocks, ETFs, and options, but really, as far as creating a trading risk management plan, you pretty much follow the same steps. So first, we're just going to look at creating one for your own brokerage account, and then we'll look at a few examples of how to create a plan based on the parameters and any specific trading challenge that you're doing with, that you may be doing with one of these prop firm trading challenge companies. Okay, so first off, you'll see over here the input for dollar risk per trade. So that is how much you're going to risk per trade based on your size of the trade and your stop loss. So that would be the dollar amount that you input here. The total number of trades that you'd want to put in here would be for the period of time that you want to set your plan for. So for example, whether that is 1 week or over a 2-week period or over a monthly period, you basically take the total number of trades that you are going to do per day and multiply that by the amount of trading days that you're going to be trading over the period. So for example, if you're only trading 3 days a week and you are taking 5 trades a day, over that, and you want to look at this over a plan for each week, then 5 trades a day, 3 days a week, that would be 15 as far as the total number of trades. If, for example, you are taking 2 trades a day over a month and you want to look at a monthly plan, typically on most everything except for cryptocurrencies, most everything else is only available to trade 5 days a week, Monday through Friday, except when we may have the markets closed for a holiday like Christmas or Thanksgiving or a few other major holidays. So typically in any given month you're going to have 20 trading days if you are trading every day. If you are taking on average 2 trades a day over that 1 month period, that's 20 trading days in the month times 2 trades a day, so you would put 40 here. If on the other hand you're a cryptocurrency trader, cryptocurrencies trade 7 days a week, so you would want to make that adjustment here if you're trading every day of the week. So as an example, if you were trading every day and let's say in a typical month there's 30 days, then and you were taking 2 trades a day, so that would be 30 crypto trades, 30 days of crypto trades times 2 trades a day, then you would put 60 here. If you were doing it over just 1 week, then 7 trading days in a week. If you're trading every one of those days on crypto that's open every day for trading, then you would put 14 here. But just to make things simple, we will just go ahead and look at trading every day as an example and taking 2 trades a day. So that's what we have set up here as a default. And we'll just start out with the default risk of $250 per trade. Okay, so as you can see here, you have your risk to reward ratio, the default settings that are preset are 0.5 to 1, then we have 1 to 1, 1.5 to 1, 2 to 1, 2.5 to 1, 3 to 1, 3.5 to 1, 4 to 1, 4.5 to 1, 5 to 1, 6 to 1, 7 to 1, 8 to 1, 9 to 1, and finally 10 to 1. Now you can change these if you want. If, for example, you wanted to do 0.5 and then make this 0.75 and then make this 1.0 and then 1.25, 1.50, 1.752, etc. You can change these. So this is customizable. You can change these to whatever you want. This is just a starting point for you to look at, and these are the most common risk to reward ratios. However, if you want to drill down and be more specific and come up with ones that fit your trading style, that are specific numbers that you would like to adjust these to, then you can simply change these here. What this figure here is based on your risk per trade. If you have a 0.5 to 1 risk to reward ratio, that would mean that this line here is your profit per trade. So 0.5 of 250 is 125. A 1 to 1 ratio on a risk of 250 means you're risking 250 to make 250. So this represents that if you have a profitable trade, then you're making 250. Same thing in here on 1.50 to 1. So on a $250 risk, we're risking $250 to make $375. So if you have a winning trade, then on a 1.5 to 1 risk to reward ratio, your gross win on the trade would be $375. And just moving along one more here, you pretty much get the idea running across here. A 2 to 1 would mean risking $250 to make $500. So here, $500 is how much you would make per winning trade on a risk to reward ratio of 2 to 1. Okay, so here we have our win rate percentage ratio, number of wins. So this is based on the total number of trades in the period that you're looking at. and number of winning trades, number of losing trades. So if we have 100, we have 40 trades over the trading period, which in this case we're looking at this over a month, 2 trades a day, 20 trades in a month, that 20 trading days in a month. Then you would have 40 winning trades, 0 losing trades. If you had a 0.5 to 1 risk to reward ratio, then your profit before commissions would be $5,000. Now the reason we don't have a commissions part in here is that many people trade commission free nowadays. There's a lot of brokers that offer commission free trading, but if you are with a broker that does not offer commission free trading, then you would simply want to take this number here and multiply the commission for the size of the trade that you're taking. And remember, every trade you have an entry and an exit. So if you have 40 trades in a month, so that's 40 entries and 40 exits. So let's say you're paying $1 commission on every trade, then over the monthly period that would be 40 entries times $1 each if your commission was $1 on your particular size entry, and then you would have 40 exits of the trade, which again would be $1. So it's a pretty negligible amount, but just keep in mind that these are the gross profit, so you would need to factor in whatever commissions that you may happen to be paying if you are not trading through a commission-free broker. Okay, so depending on the total number of trades, this particular section here with the percentage will change. So just when we're going down here, if you scroll down, you'll see that this does go into negative territory, but just ignore anything that is below 0 on any sheet that you put together. And the reason it has to be done this way is that it has to be done this way to accommodate changes in the total number of trades. So just as an example, if instead of 40 we put in 100 here, then you're going to see this win rate has changed to where the steps are closer together, because we have a different win-loss rate, because now we're taking 100 trades in the period of time we're looking at. So if this was 100 trades over a month, 20 trading days in a month, you're trading every day, that's 5 trades a day, that would be 100 trades over a month. So as you can see here, this goes down a lot further in smaller increments, whereas if we changed it to, so again, just reiterating the previous point, don't look at anything below 0, because this is where you would be losing every trade out of that 100. So again, this is just done this way so it can accommodate whatever number that you put in here. Okay, so as an example, if we just put in 10, then you're going to see the win rate go down in 10% increments, because we're only taking 10 trades within this period. So as an example, if we were looking at this over, say, a 1-week period, 5 trading days in the 1-week period, Monday through Friday, 2 trades a day, then that's how this win rate here gets adjusted based on the total number of trades. But let's just go back to the original example, which is 40. So as you can see here, based on your risk per trade of $250, depending on the risk to reward ratio that you want to use, means that you could become profitable even with a risk to reward. If your risk to reward ratio is, say, 3 to 1, and you're taking 40 trades over the month, you can still make $10,000 gross profits before any possible commissions in the month with a 3 to 1 risk to reward ratio, and that's at a 50% win rate. And as you can see here, even with a 30% win rate, if you have a 3 to 1 ratio, which is this column here, it's $2,000 profit. So what this tool can also help you with is deciding what risk to reward ratio may be the best for you to use with your average win-loss rate, and really how much total overall risk that you're willing to take within a month. Because here, let's say if this was a monthly period we're looking at, we have $250 risk per trade, total 40 trades in a month, so we're risking $10,000 total over the whole month. But let's say that we're going to still take 40 trades in a month, but because we would like to take 2 trades a day on average and trade every day, 20 trading days in a month, then, but we only wanted to put at risk over the entire month $5,000. So then we would change our risks from 250, which is putting 10,000 at risk over the entire month with 40 trades, to $125. So as you can see here now, our total risk over the month, taking 40 trades in the month with $125 risk per trade, we have a total possible risk of $5,000 over the whole month. And if you went the other way, let's say you changed this to $500, still had 40 trades in a month, then you're risking a potential of $20,000 over that monthly period, taking 2 trades a day on average over 20 trading days in an average month. Okay, so now let's look at using this tool for specific challenges like FTMO, TopSteps, etc. So first, let's look at FTMO. So for example, here you have these various FTMO challenges, and they range from $10,000 challenge to $200,000 challenge. Here's the trading period, unlimited minimum trading days that you need to trade in order to achieve the goal, meaning that in this case with FTMO, you have to trade for at least 4 days, and this is your maximum daily loss limit amount, and this is your maximum loss limit amount over the challenge. And then this is your profit target. So let's first look at, say, a $100,000 challenge. So here you have a maximum daily loss of $5,000, and you have a maximum loss over the entire trading challenge of $10,000. So if you wanted to take this challenge and come up with a risk management plan for passing this, then you would take the maximum loss allowed over the trading challenge, $10,000, and let's say we were going to give ourselves, you have a minimum of 4 days, okay, but let's say that we're going to give us a full month to pass this. So as we talked about earlier, if we're trading most items except crypto, there's not including any possible major holidays that may occur in some months, you're going to have 20 trading days on average in a month. So we have $10,000. We go back to our risk management here. Let's say we're going to take 2 trades a day, 40 trades in a month, and we're going to risk $250 a trade. Now remember, our goal is that with this $100,000 challenge, our profit target is $10,000 to pass the challenge. So you want to look at where on these lines here is a figure that's $10,000 or greater. So as an example here, we have with a 2-to-1 risk to reward ratio based on taking 40 trades in a month at a risk of $250 a trade. If we have a 68% win rate, then our gross profit over the entire period is going to be $10,250. But let's say you're only comfortable trading with a 50% win ratio. So we go down to the line here of 50%, and we go over to here, and we have 50% win-loss ratio at a 3-to-1 risk to reward ratio. Then we have a $10,000 gross profit over the trading period. Looking further down, let's say if you're only comfortable with a 40% win-loss ratio. Well, then you look over here and we have $10,000, and that's using a 4-to-1 risk to reward ratio. Go down one step further at a 30% win-loss ratio. We go over here and we have a 6-to-1 risk to reward ratio, and then we will have $11,000 profit over the 1-month trading period using a 6-to-1 risk to reward ratio. And taking it down one step further, with only a 20% win-loss ratio, you would need to use a 9-to-1 risk to reward ratio to reach the $10,000 goal over that time period. Now let's say that you don't want to take a whole month to pass this. You only want to take, you're in a hurry to try to pass it. Then let's say you want to pass it in 10 trading days. So a couple of different ways you can look at that. So we have 10 trading days. We need to have these figures add up to $10,000 like we did here, 40 times 250. So let's say over 10 trading days, we only wanted to take one trade a day, and we wanted to risk $1,000 a trade. Okay. All right, so as you can see here, with a 30% win-loss ratio, you would need to have a 6-to-1 risk to reward ratio to get to $11,000 over 10 trades to pass the trading challenge. With a 40% win-loss ratio, you would have a 4-to-1 risk to reward ratio to use in order to reach the $10,000 milestone to pass the trading challenge. If you have a 50% win-loss ratio, meaning you're winning one and losing one, you're basically winning is just as much as you're losing, you're at 50%, then a 3-to-1 risk to reward ratio. But again, as I mentioned earlier, this is before any possible commissions. So this is a gross figure. So with this gross figure, say if FTMO is charging you commissions on every one of your trades, then you would be slightly under 10,000 with this. So you can either look at doing a 3.5-to-1, or you could change this to something different, like for example 3.25. Because remember, we said that you could change this to whatever you wanted to. So at a 3.25 risk to reward ratio, okay, and a 50% win rate, then your profit over the 10 trades is going to be $11,250. If you have a 60% win ratio, then at a 2.50 to 1 risk to reward ratio, your gross would be $11,000. And as you can see here, with a 70% win-loss ratio and a 2 to 1 risk to reward, then you're at $11,000 as well. But again, we could change this. Let's say we wanted to just make this 2.25 instead of 2.5. And that'll show you how that would work out as well. So the key here is finding a risk to reward ratio that you feel comfortable with in your trading strategy, as far as for how much risk you're putting on, what your target levels are as far as exiting trades and closing out trades, what you feel comfortable with as far as with your particular strategy upon entering. Are you the kind of person that does a lot of scalping where you're not using, meaning you're using a lot lesser risk to reward ratio, where you're getting out fairly quick and you're maybe ramping up and doing a lot more than 10 trades, maybe you're doing 100 trades instead of that, but you prefer to do more trades and use a less risk to reward ratio because you're the type of trader that likes to get in and out of trades quickly. You don't like holding on for bigger wins, which you will need to do in order to have a consistent larger risk to reward ratio, versus if you're just scalping and making small amount of profits but doing lots of trades, a lot more, great many more trades than you would be using in typically with a scalping process, a lot lesser risk to reward ratio. So for example, instead of 1.5 here, you might do 1.25. Excuse me. And you could make this 1.1, you could make it 1.15, you could make this 0.9. So the point is you can change these to whatever you want. Basically looking at how you trade, where you're typically getting out. If you feel that you have a pretty decent win rate, but you can take a look at, okay, how many trades am I going to need to take over a specific period of time to reach my profit goal, whether that profit goal is for passing a challenge in the case of FTMO, reaching a profit target, or if your profit goal is just simply how much money you want to make on a given day or a given week or a given 2-week period or a given 1-month period, as an example. So this can help you in deciphering where your sweet spot may be as far as your style of trading, your risk tolerance, and your tendencies of how you trade as far as holding on to trades, and where your risk to reward ratio really is as far as your process and your trading methodology and your typical trading style. Okay, so let's look at another one here. If you go back and look at, if you were just doing a minimum trading challenge here, where you have a maximum loss limit of 1,000 and a profit target of 1,000, then you would just go back here and you would change these to figures that equal 1,000, because that's your total loss limit. So for example, if we were again going with 2 trades a day over, and we wanted to look at this over passing this in a month, then that would be 40 total trades in a month. And remember, we have a $1,000 total loss limit, so our risk per trade $25. 40 times 25 is 1,000. And let's just go back and change these to what they were before. So now these are changed back to what they were before. So here, remember, you're looking for a $1,000 profit target. Your maximum loss over the trading challenge period is $1,000. So you're looking at where you have to be to have at least $1,000 profit over that period. Again, you also have to factor in whether FTMO or whatever funding company that you're using to take the challenge with is charging you commissions or any other fees per trade. So for example here, with a 50% win rate at a 3-to-1 ratio, then you're at $1,000. At a 3.5-to-1 ratio, then you're at $1,250. And you can see what the rest of them turn out to be. If you want to go the other way, you look at the maximum one here. You took a $200,000 challenge. Your profit target is $20,000. Your maximum loss over the total trading period is $20,000. Keep in mind this maximum daily loss in these particular examples is not going to come into play because of the fact that you're capping your risk per trade and your number of trades per day. So unless you're putting on really a maximum amount of risk per trade, and if you were trading $5,000 risk per trade and taking 2 trades a day, then if you had a maximum daily loss limit of 10,000, then on any given day, then if you're doing $5,000 risk per trade, 2 trades a day, then you may want to look at this and change the loss to 10,000 instead of the total. But that's really not the way you need to do it as far as trying to pass these challenges. It's better to look at the maximum loss limit and spread out your risk over many more days rather than trying to go all in and pass it just in a couple of trades. So, but if you are the kind of person that does want to do that, then I would recommend that you change it to looking at those figures as maximum daily loss if you're going to take very high figures of risk per trade, where you could potentially lose in just one day the maximum daily loss limit. Then you would go back and change these figures here to where they add up to the daily loss limit. But if you're doing it the normal way, then you would do these figures so they add up to the total loss limit spread out over the amount of trades over the given period, whether that's 1 week, 2 weeks, or a month. So if you were going with this one here and you had the 20,000 and you had 40 trades over a 1-month period, then 20 trading days in a month, 2 trades a day, then you would change this figure to 500. And then again, you would be looking for areas which are equal or greater than $20,000 as to where you need to be based on the type of win rate that you have with your particular trading style and trading methodology. Okay, so let's look at, as an example, the other trading company here, which is a very popular one, TopStep. So for an example here on their, let's look at the one in the middle here, the 100K challenge. Your profit target is 6,000. However, your maximum loss limit is $3,000. So that's different than FTMO. So you have to pay careful attention to whatever trading funding firm you're taking the trading challenge with as to what their parameters are. So here we have a profit target of 6, but unlike FTMO, where the profit target and the maximum loss limit were the same on each one, if you go back here, profit target, maximum loss, see, it's the same on each one. here with TopStep, the maximum loss limit is half, at least on these two here. Here, the maximum loss limit is 2, your profit target is 3. That's on the 50K challenge. 100K profit target 6, maximum loss limit 3. 150K challenge, profit target 9,000, maximum loss limit 4,500. So we'll just look at this one now, $3,000. So you would go here and you want these to add up to $3,000. So let's say that we were going to take 20 trades over the period. Let's say, as an example, we were going to be trading 5 days. We're looking at each period as 5 days, 5 trading days. And we wanted to take 2 trades a day. That would be 10 trades total. Risk per trade, $300. And now we're looking for our profit target of $6,000. So you go here and you want to go over and see where you have to be for $6,000. So remember, just taking 10, we're considering 10 trades over what trading period that we're looking at. So this could be, as an example, this could be 10 trading days, 1 trade a day, or 5 trading days, 2 trades a day. 10 total trades, $300 risk per trade. If we have a 50% win-loss ratio, we need to get to $6,000, so that would be a 5-to-1 risk to reward ratio. If we're at only a 30% win rate, then we're going to need to be at 9-to-1. If we're at a 70% win rate, then we're going to need to be at 3.5-to-1. And again, if you want to change this and say, well, that's 6450, maybe I could make my risk to reward ratio slightly smaller than this. Maybe I could just make it 3.33. Then here you would have 6,093. But as you can see here, you can sort of crystallize in your mind with the total number of trades you want to take over the given period that you're going to give yourself to pass this challenge. Figure out the total number of trades based on how many trades a day over how many trades are in the period of time that you're going to be giving yourself to pass this challenge. Then take the total max loss limit, and then you can arrive at those figures. So the total loss limit here is 3,000. If we're only taking 10 trades over whatever period of time, then it's $300 risk per trade. If, for example, we were doing 30 trades, then we would have a $100 risk per trade. Let's say you were only doing 5 trades. Then you have a $600 risk per trade. And you would do the same thing, go through the same exercise if you were doing 150K. You just simply adjust the amounts based on maximum loss limit and profit target, and the same thing here with the 50K. Okay, so I hope you have found this video to be useful. I hope that the tool, you'll find that you can make use of it and customize it to your needs. And we thank you for taking the time to watch this video, and we hope that you will check out our different daily key levels indicators and subscribe to our YouTube channel. You can also follow us on Twitter, on X, at DayTradingGPS. That's our handle on X, which is formerly known as Twitter. You go here for our subscribe to our YouTube channel, and again, these links here are for more YouTube videos that show you how to use and profit and trade using these different daily key levels indicators. Okay, well, thank you again for your time, and thank you for watching. Please like and subscribe to the channel, and we wish you prosperity in all of your trading.